Good morning, everyone. This is Marshall Gidler bringing you the morning comment for September 29th. Last week, I pointed out that the DXY index had risen for 10 weeks in a row, the first time that had happened since exchange rates were floated in 1971. Make that 11 weeks now. The DXY index was up 1.4% last week, the third highest rise in the 11-week streak, meaning it's not showing any signs of slowing. The dollar rose last week against every currency we track, both the G10 currencies and emerging market currencies. The worst performing currency by far was the New Zealand dollar, which collapsed after RBNZ Governor Wheeler Thursday said that the level of the currency is unjustified and unsustainable. The other commodity currencies, the Aussie and the Canadian dollar, were also weak, but nowhere near the Kiwi. Weak Chinese data is likely to keep these currencies under pressure, in my view. Some commodity-dependent EM currencies could also struggle. Oddly enough, everyone's favorite short, the yen, was the strongest of the G10 currencies last week, despite a further slowdown in Japan's inflation rate, which in theory raises the likelihood of another round of Bank of Japan action. Perhaps that reflects the fact that the dollar is up 4.9% against the yen anyway since the beginning of September, the most of any G10 currency except the beleaguered Kiwi and Aussie. I see no reason to think that the dollar's rally will come to an end anytime soon. There may be ups and downs, but the main driving force, the divergence of monetary policy, is likely to remain in place for the next 6 months to a year at least. Plus, the historical pattern is for the dollar to rise in the months preceding a rate hike. So, I expect dollar strength to remain the main trend in the market. As for today, the preliminary German CPI for September is forecast to have remained unchanged at plus 0.8% year-on-year compared with August. Eurozone's final consumer confidence for September is also coming out. In the UK, mortgage approvals for August are due to be released. And in the US, we get the personal income and personal spending for August, which are expected to have accelerated a bit. Pending home sales for August are expected to drop. The Dallas Fed Manufacturing Index is also released. Plus, Chicago Fed President Charles Evans speaks. For the rest of the week, the highlight will be the ECB policy meeting on Thursday. We could get a bounce in eurodollar after that if the ECB doesn't announce any new measures, which is what I expect. On Friday, the U.S. non-farm payrolls for September are expected to come in at 210,000. That's over the 200,000 line again and confirming the solid employment outlook. That should be dollar positive. And on Wednesday, the Bank of Japan releases its Tankan Business Confidence Survey for the third quarter. That's expected to show sentiment declining in most categories. That puts more pressure on the Bank of Japan and is therefore negative for the yen. Please see the comment on our website for further details about our view on these indicators, or tune in again tomorrow. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gidler, head of Global FX Strategy at IronFX Global, wishing you solid trading.